Friday, January 27th, TGIF. This is Market Analysis, Stan Ehrlich, and we have some follow-through. Not much, but some is better than nothing. I always start out with the S&P 500. It's a representation of the market overall, the best in my opinion. Next is the Qs, maybe one of the Russell, and the Dow is only 30, and it's the heavy-duty industrial, so it's not really a great representation. S&P is my favorite. We have a gigantic head and shoulder bottom, started in June of last year. October 13th was the head of the formation. It was also a bullish engulfing ER buy signal, official automated system. The last shoulder low was in late December 22nd, I believe, December 22nd. And we rallied up to a couple of weeks ago, the major bear trend line, which had several tests during the year of 2023, and finally has now been broken a few days ago. Immediately a test of the neckline, the solid green line across prices here. And this is real-time current quote, spider quotes. Yesterday we broke above that line, and I'm not sure why this is there. This is out of place for some reason, sorry. Broke above that line and was an official quote-unquote bullish breakout, in my opinion. Today, the low is almost exactly on the line, which was about 402 and a half, maybe 402, yeah, and a half. Today's low was right in the ballpark at 402 from 403.44. And we have made new highs after the early morning new high, and then a dip, and now new highs again. We are currently 11 o'clock, 10:53 California time, still 2 hours and a few minutes to go. At the end of the week, still strong. We're near the highs of the move. And of course, you can email me at info@ersignals.com. We've got questions, comments, whatever. This chart looks great. The bull market of 2023 has started, in my opinion. The minimum upside objective representing the cyan, blue, light blue, baby blue, whatever, vertical dashed line, all the way up to almost new historic highs. But I said minimum. Head and shoulder bottoms and most chart formations produce an objective that's measurable and forecastable, but often the market goes significantly further than that minimum. So I'm totally expecting, I don't know, summer, fall, new historic highs in the S&P 500 and in many other indexes as well, period. We'll take a look at the sector charts at the end of this, and I'm going to be shorter than yesterday by a long shot. So I like what I see. I'm now going to change to the variety of indexes. The spider at the moment on a 1-minute chart has come up and made new highs by a smidge about an hour ago, settled back slightly, now going sideways at the moment. What I'd love to see is this thing to jump up to at least 410, but we have some problems in the wind. Guess what? On the breakout, and today, for the first time in quite a while, we actually reached an overbought condition by a very small amount. So our RSI custom version at the bottom of the screen did get over 75, and that's my level for overboughtness instead of 70. And that means that we are in danger of starting to turn back down. But this is a major long-term bullish breakout above the 200-day moving average, above the long-term bear trend line, above the neckline of the head and shoulder bottom formation, and almost above 410 and a half, which is not out of the question here. We're already 406.20 momentarily, and we've had a high about a point higher than this. So a few more points is going to make new highs since what? Since September. And that high is in jeopardy almost immediately. So I think it might take out 411 or 412 at the same time, same day. And then you'll be at new highs since August of last year. That's a half a year. August, September, October, November, January, February, March. Not quite a half a year, but several months. Or a few, I meant. Excellent long-term bullish indications, especially on a Friday or the end of any particular week, let alone during the day, of course, on a closing basis. So up and away. I'm obviously not looking for any downside retracement at this point. I was a little too late timing-wise and a little too low price-wise, but the formation did not elude me at all. It's just that the last shoulder low on December 22nd happened earlier than I expected by about a month, but we're off and running. We should be. Any close below the neckline, which is currently trading at 402 and a quarter, the neckline level, not trading there, but that's not good. Closing below a neckline is one of those hard, fast rules you're not supposed to do if you believe the head and shoulder bottom is going to work properly. Sometimes you see a little bit, sometimes it's only one day. That's fairly rare, but you should not close below that neckline. That's our fail-safe sell stop. Let's just say 401.50, a little bit below 402 and a quarter. What about the DIA? It has slowed down, relatively speaking. The momentum here is nowhere near as good as the fastest one we'll look at in a moment, the QQQ. It started this whole process about a week ago. But the DIA has an upper slanted neckline, is not that close to it at all, appears to need a few days of very significant strength in order to break that line, which I think it's going to do eventually, but it may be a couple of weeks from now. What I think is going to happen is the Qs are going to get tired because they're overbought for 3 days already. Now the S&P is overbought, and the DIA is just going to get up to that neckline or previous resistance levels, and the other two are going to get overbought, and everything's going to come down a little bit for a short period, and then it's going to do it again to the upside, and then the DIA is going to break its neckline, and then again, maybe 2-3 weeks from now, something like that. So we just have to wait for the DIA, but the pattern's there, nothing wrong with it. It's just slow to get up there. Now the Qs. Hey, 5 days ago, they broke the long-term bear trend line. They broke their neckline and closed strong. The next day, it held, everything held. But like I mentioned a moment ago, sometimes markets get below their necklines, which they're not supposed to do. This did, on the opening on the Qs, drop off a little bit more, and all of a sudden, I think I said literally, pop back like a ping pong ball being pushed underwater. So on the close that day, it was almost higher on the day, which was a real big comeback, but it was very close to the high, and again, back up above the neckline. Great. Yesterday, new highs for the move up for a couple of months, and today, we have just in the QQQs, with a current quote of 297.12, surpassed a very important previous high of 296.88. Now the Qs are already in new high prices since September 13th, September 13th. It was higher than any other high since September 13th today, right now. Now the 1 minute chart, and that's just plain great. But we've been overbought in the last 4 out of 5 days. So be careful here. Now the Qs are prime target for a downside correction. And just because we got a little bit above those highs the last several months does not mean we're going to stay there. If the Qs close below that previous high on December 13th, which was 296.88, it could be a sign that it hit buy stops, couldn't hang in there, lost strength, and is now ready for the correction next week. Would not be surprised. Would not be surprised at all. Okay, and I'll talk about how much, but not now. Probably a Monday. Now next, we have the 1 minute Qs. We're right smack dab in new high ground 2 minutes ago, doing extremely well, the best of all the indexes. And right now we're getting a sharp little rally in the S&P 500, definitely approaching the high of the day on the spider. hey, everything's doing great. Futures. We have got some new signals in futures also. So here we go. I've bunched these organized these so that the more important ones are in the early part here. Cocoa. We're going to start out with the cocoa. It is forming a potential head and shoulder top. I said so yesterday when that one little spike came up. It's almost as high as I wanted. It is about the right point in time. And if it starts to go down, even if it makes a slightly higher high and starts to close lower, that could have been the last shoulder high yesterday. And I said so yesterday. But we needed to do what it's doing today, which is starting to slip a little. Yeah, more slippage, the better. You can't go sideways too much. The shoulder shouldn't be more than a couple, 3 days in size, like over here on the left around December 27th. The neckline would be slanting downwards slightly. I'll draw that in Monday. And the last shoulder needs to go sideways to lower. Lower right away is just fine. A couple days sideways is just fine, but not too much strength at all. Next chart. We have the head, actually a very small possible head and shoulder top here as well. I just noticed in the soybeans. Neckline would be slanted upwards, and it's only about a 1.5 month in time frame, which is not that, it's small, not even medium, it's small. But the top is a bearish engulfing. Hey, the Ehrlich reversal caught the top of the market so far, and now a potential bearish pattern is developing, which would be great because then it would mean that we pick the top of a head and shoulder top, but it remains to be seen. Next chart. Yesterday, we had a bearish engulfing ER sell signal in gold, and today the market is basically unchanged, but we did have that retracement I like. And the next move is down. It had better start going down and start closing below today's lows or the lows for the last, say, 6 days, and then it's probably going to fall some more. Too much strength will stop me out, and that will be at 1966.6. That's my stop. Next. Bullish engulfing yesterday on live hogs. Today we didn't retrace quite as much as I would like, and we closed slightly lower, but I don't see anything wrong with this. I totally expect that there is going to be a little retracement. There usually is when we have these kinds of bullish ER buy signals. So buy this dip, use a protective stop just under 84, just under the lows of yesterday, and that's it. That's your risk. The upside objective is probably at a minimum at 92.5. Next chart. Second bearish engulfing ER sell signal in 4 days. Now that doesn't guarantee it's going to be more profitable than a single sell signal. Well, we had 2 of them that are very similar to what we're looking at right now, and the second one was on November 11th. That's equivalent to today. And 3 days earlier, we had a bearish engulfing that wasn't quite on top on 1108. The one we had 3 days ago was on top of that rally so far. Now, this is an outside down day and a new low and a new low close since the sell signal 3 days ago. Excuse me, but rightly so, a new short sale signal also today, and that is heating oil. Now, watch this. Crude oil, bearish engulfing today. The high is near resistance, right smack up against a couple of other highs and a historical level at that. Look all the way back here in March and April, where the market was at that approximate, give or take a very small amount, same level. And there's some evidence since then, especially recently, that same level of, let's call it 83, is resistance. It's a little under 83, but 83 will work. So here we have a bearish engulfing. This could be the beginning of a drop in price, a dip that's going to continue the bear market, that's going to make new lows below 70 and going to drive it maybe into the 50s. I would not be shocked. Certainly in the 60s, I would expect. We're at 83 almost at the moment. No, that's not right. What did I say? We're at a little under 80 at the moment. So I'm looking for a pretty good 10, 15 point, maybe even more point break here. That's a pretty significant percentage of the total value. Crude oil, that's crude. And again, heating oil, both of them bearish engulfings today. That's really a pretty optimistic sign. Platinum, we did get the top of the market a couple of 3 weeks ago. And what do we have today? A new low and a new low close. What can I say? Minimum downside objective is going to be at that 985-ish to the bottom of the trading range that we are sinking into, which is support. And that started in November 11th until about December 29th when it broke out of it to the upside. So it's a decent support area. I wouldn't call it fantastic, but certainly I'm looking for something in the 988 range next chart. Spike up. Now sugar, I had mentioned, seems to be forming a head and shoulder top, but today is a little bit too damn high for that last shoulder. If it does turn down, and it is overbought, so it's likely to turn down, this will be called probably a lopsided head and shoulder top or a double top. Guess what? The downside objective on either of those patterns is almost identical, so it really doesn't matter. All we have to do is stop going up, and again, we're overbought for the second day. Wouldn't be a damn bit surprised. The high was 21.19, give or take a few ticks, and we're at 20.96 for the close, and a high of 21.04, call 21. So we're close. This is a prime target for a new short sale for a potential very big move down because of the way that it's building a significant top. It's either a head and shoulder or double. That's sugar. Next, we're up into the resistance area in a bear trend and overbought. Come on. This is exactly where you want to look for short sale signals or excuses to go short. This thing has been up. Oh, my goodness gracious. Great balls. Okay. 1, 2 days up, 1 day down, 1 day down. And that's it out of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days up. We're up 9 out of 11 days. No wonder we're overbought and went straight from oversold. Wow. To overbought. Yep, this thing's going to turn around and go down into new low ground for the trend. That's coffee. Okay, wheat. Bearish. Not much going on. No signals. Up against the bear trend line, sort of. Lows are lower over time. Highs are lower over time. What can I say? Heading south. Next, high-grade copper, HG. Got overbought. Warned you day after day. Unfortunately, it took several days. It looks a little weird there, that RSI activity. But it does match up with the price action. So I guess there's nothing really wrong. It's just unusual. And today we have a big drop. It's a new low for 1, 2, 3, 4, 5 previous days. Almost a new low for 6, 7 days. So it's been a week. And we're new lows, and it closed below all the closes for the prior 5 days or so. We're starting to move down. How much? Probably down to 394 and a quarter area. And that's just the beginning of support. So it could go a little lower than that in the next week or two. Next, natural gas heading south, but look at the divergence here. You have your lowest level on the RSI really when it begins to lose downside momentum, and that's one of the things that oscillators can help with discovering this. But there are momentum indicators. They discover the same kind of thing on the average. So I think this is going to rally any moment. I think I've said that for the last several days, and it hasn't. But it's nowhere. I would not sell the short. I would be looking to go long for some reason. No reversal, no signal today. And that is natural gas. Yep. Live cattle. We had our break into support. We had a little bit of a rally, did not make a new high for the trend yet. We dipped down for a day or so yesterday, and today a little bit more of a dip, which is inconsequential, except it's at support. With a higher close, likely, is probably starting to move up into new high ground. Yesterday could have been, or rather today's lows, could have been a minor low, and of course the one several days ago, much more significant. But no signals, just simply oversold. and that was live cattle. Now we're going on to bean oil. Oversold around the lows of the last few days and back into a support area. I wouldn't go short. It looks like it's going to bounce a little bit, probably up to 62.20 and maybe up to 64.20. The trend is down recently to sideways. This is a giant pennant formation starting to form way back. Looks like April. Neutral. Next. Corn. This is trying to bust into new high ground. It's still putting the right foot forward. A little higher close probable, but we want to see a close above a 690 for a new high and a new high close, and push toward the top of this resistance area, which would be 703-ish. Yep, that's what we need is 704, 5, 6, 7, 710. Call it 711. And then you're almost assuredly going to make new highs for a long time. Next, bonds. I've been saying this is trying to build a long-term bottom formation of some sort. Don't really have an answer as to what sort, but I don't mind it dipping back down here a little bit, and I think it's going to fiddle around and drip off a little bit more slowly in the next weeks to come. There is even a chance of a modest new high, but there's a lot of resistance up here, and I don't think it's going to shoot straight through the roof. So sideways with a lot of wobble, and I favor the downside slightly. Next. Same thing for 10-year notes. Exactly. Next. Silver. Quite a bit of sideways movement here, but the tendency is up. I think this market's going to try to make new highs to the trend soon, but I got to say neutral at the moment. I got to wait for something to happen. Next. E-mini, obviously the same as the Spider SPY. Head and shoulder bottom, obviously, and I told you I was going to draw the trend line, and I apologize I didn't do it, so here I'm going to do it right now real quick. Oh gosh, I didn't want to turn chart trading on. That was a mistake. Give me 1 second. I don't want to do that. And turn chart trading off. Okay, trend line, sorry, drawing. It's in approximately the same spot, see. There it goes, and here it is. Because of the overnight market, we are at the neckline right now in the Spider. I meant E-mini. So there's another reason to believe that we might be close to a minor downside correction on the indexes. But again, I favor another strong day like Monday, and then maybe it's going to happen. I don't know. This is a little bit confusing. We'll see what happens. Next is after the Spider. We've got the orange juice. I've been talking about the head and shoulder top here. We are coming up the last couple of days a little bit, nothing significant. There's nothing really wrong with that, but it can't go sideways another week or two. That would make this pattern too much lopsided. We need to break below the neckline for sure real soon, like next week, ASAP, in order to have this formation work correctly. I like what I see, but I don't need that sideways stuff, and I don't need any more strength at all. And next is cocoa. We started out here. I'm going to leave you with this, except for forex. Got something going on now. We have a bearish engulfing in the euro dollar yesterday. We have a lower market today. Today's rally high is almost exactly at the price levels that I wanted to sell short because of the red dots. We came up to almost, we sold the high of the day almost. It's in the middle of the range. Obviously, a current quote lower than the 4 previous closes. We'll see what happens by the end of the market today. I'd like to see it drop off a little bit more. We are rallying, and the Spider. I think this is a new high. Nope, wrong. Yes, indeed. We have just punched through a resistance spot, and we have seen a new high for the whole day in the last several minutes, and we're right back up there, tick for tick. We're at the high of the day, up 213 on the Spider at the moment. I love it. It's great. Nothing going wrong here. You're going to see some forex activity in a moment. DX also had a bullish, remember it was bearish for the euro. It should be bullish for the dollar index. It is bullish because we have a bullish ER buy signal yesterday, and we're up a little today. We're doing great. I have no problem with it. It's not super profitable yet, I hope. We hit the bottom of the market almost exactly in the Japanese yen to the US dollar, or dollar to the yen rather, several days ago. It's coming along okay. It's been a little slow the last several days, but we're still higher than where we bought it. ER1 or ER3, either one of them has a small profit. Next, Australia into the Aussie to the US dollar is getting overbought for the last 3 days. This is dangerous, especially when you're around a resistance level as well. So I'm looking for sell signals. Today we have an inside trading range with a slightly lower quote. Nothing special, but I'm looking for sell signals. I'm looking for a reason for this market to dip back down a fairly sizable amount, I would think, probably to a minimum of 0.6870-ish. Next chart is US dollar to the Canadian. We caught the top of the market way back here, October 13th. This is a new low and a new low close for a couple of months since late November. The only thing left is support that was in early November. I think it's going to attack that and break it. Remember, it was support because of previous highs that were broken, and then the market came down to those same levels and tested it back on November 15th-ish. Then it rallied, but couldn't and didn't make a new high for the whole trend. Now we're starting to slip off for a month or two, and attacking that same old level of 132.25-ish and breaking it would be probably bearish all the way down to 128. Next chart. Dollar Swiss franc. Bullish engulfing a few days ago. It's working. We've closed higher for 2 days in a row. It's almost a new high close since the bullish signal, but this is going slow. It's not super profitable. Nothing great. I ain't going to write home about it yet. So there's a chance that it might fail. It hasn't started to work really well. Lastly, euro to the British pound. Notice that we had a bearish engulfing candlestick on the 17th of January. The reason why it didn't turn red is because we weren't overbought within the allotted time period. So it's just simply a bearish engulfing. They are by themselves supposedly bearish, which I do believe. And this one did drop off for a couple nice days. I just don't have a signal recently. I'm fairly neutral to a little bit bearish here, and that's the last one of that. Now, with the stock market indexes being very strong, and now we're up 2.25 on the E-mini at 407.01. We're at 407. Only 3.5 points from 10.49, the highest high for months. Sectors. You would expect to see a lot of bullish activity here, and we do. A couple of weeks ago, I had some good sell signals that worked for a couple of days, or they didn't work at all. And most of those are gone bye-bye, and they're bad signals on the average. We did get a bullish engulfing here, ER buy signal on XLP a few days ago. So far, so-so. Nothing great. But if the stock markets really start roaring, then this is probably going to be pulled up with the rest of them, but it remains to be seen. I'm friendly because of the bullish signal, but I don't like the fact that trend has been down for 2 months while everything else has pretty much been going up. Next, IYE. Bearish engulfing didn't work. Like I said, this is probably going to make new highs for the trend. I like what I see. Next, SMH. New high close, almost identical range today that it had yesterday, except for the opening. So other than being overbought, which makes it very dangerous to try to buy it up here, I wouldn't do that. I'd be looking for a minor downside correction. And you see, I drew a neckline. There's a head and shoulder bottom. It broke out like the QQQs did. So they're going to correlate fairly well, I would expect. Next, pretty much the same commentary on XLK, but today's the second day above the neckline like the spider. So up we go. Very big bullish objectives here. And of course, in most of these, we caught the October 13th, October lows ER, bullish engulfing, that is going to go down for years to come, maybe, is a whopping buy signal. And I started talking about that October low back in August. Next, wrong thing. Here we go. Bear trend line is broken. It's not a neckline. But the bearish engulfing working for only one day, a week and a half ago, is bye-bye. We gapped above that previous bearish engulfing high yesterday and followed through today, making new highs for several weeks, a couple since October, or even maybe late September. Well, early October at least. So this is looking great. But guess what? Bullish. I'm sorry, overbought significantly so at 82 plus. So maybe a little bit more strength for a day or two. And maybe it's substantial, but don't go running after this. It's too dangerous. Next, we have almost an overbought condition, not quite. Looking pretty good. I like what I see. You are, I believe, in new high ground. Not quite. No, sorry. We're right smack at the old historical resistance level, late November or December 1st. What is that? December 1st. And it could top out here for the moment. I think the trend is going to be up. This looks like the DIA with a slightly upward slanted neckline across, the highs in August and in early December 1st. So it needs a little bit more to break that line. There's a double shoulder over here. There's the head of the formation. And then there's the last shoulder low in late December. So head and shoulder bottom. Next. Also head and shoulder bottom with a very small last shoulder. The timing is about right on all of these, of course, but the levels at which the shoulders developed are significantly different in some instances. The neckline here slants upward quite a bit. So it's going to need a lot of work. Next, XOP. No head and shoulder. Big giant pennant formation. Hasn't broken the bear trend line across the tops of the pennant. And that line would be something right around in here. I don't think I need to draw it right now. So I have to be neutral, but some very bullish expectations. Bad sell signal a couple of weeks ago, like a few of these. Next. GDX, up and away. What can I say? We are not oversold bought at the moment. We came close a couple of days ago. We've dipped a little bit now. I think this is a prime target for making new highs very soon. Next, OIH. The bearish engulfing is still good from several days ago. I think this is one of the last ones. I don't necessarily believe it's going to stay good, but I can't help myself. I got to believe that it has a chance. Today's high is probably the highest I would want, and even a little bit more than that. But it didn't make a high higher than the bearish engulfing ER sell signal day. And that date, of course, was January 18th. So if I'm going to be right about down, it needs to do it right away. Next, XLB as in boy, resistance stopped it for the third time now. So I think maybe a little bit of a dip is in order, but you can't help yourself. You have to look for new highs. I'm bullish, dip or no dip. If you get a dip, you might want to buy it. If you want to buy it on the breakout, be careful of overbought conditions. You eliminate that, by the way, by going sideways to a little bit lower for a few days, and then all of a sudden jumping through the resistance and breaking out of the formation, and you won't be overbought under those kind of trading range conditions. That's what I would look for, I guess. XLV, neutral, pass. XLE, bullish, expecting new highs for the trend. Overbought for a day or two. Watch for a small correction, but I'm bullish. XLU, we were oversold a few days ago. It's starting to go sideways nicely. I think it's turning around and starting to go up. This has that gigantic head and shoulder potential. And the last shoulder low is a lot closer to what I was forecasting for the S&P. But the S&P didn't do it. This one did. Neckline's fine from this high on September 12th, and of course, the high on December 13th was tested, didn't get broken a couple of weeks ago, dipped back. So the next drive to the north, upwards, I think is going to break the neckline, and you will have a giant bottom here, just like the other indexes. That's going to look pretty darn good. So I'm thinking of turning bullish. I'd like a little bit more strength here, closing in the low 70s. Next, XTL has a very broad double bottom, not as great equal prices that you would like to see, but still a double bottom, and has not broken out to the upside. So it needs a little bit more time. Next, I'm bullish. ITB, bearish engulfing, is not working. It's about to convincingly break above and stay above the highs that we have seen so far. So, and it looks like it's about to do it literally in a matter of minutes, just that close. We are gaining more strength on the spider, which is now, I think I've seen 407.10, but we're still hanging in there just a hair above 407. What time is it? 11:27. So we have an hour and a half, which is plenty of time to go up another 3.5 points. Remember that 410.5 level, very important. Next important resistance, and the last important resistance for a long time. Okay, next is KBE, big pennant formation, great historical support area, having been established. I think we're going to break through these resistance levels. We've already broken through. Well, I got to draw this. This is very close, so I'm going to put the line in right here. Come on, there we go. We are almost at the bear trend line. You could call it a neckline, but that's a stretch. I'd just say the top of a pennant formation, because you can draw a line under these lows and under that one, and you almost get these. So yeah, it's a giant pennant, almost breaking out of it to the upside. And next is VNQ. That's VNQ. And here we have a classic breakout. Yesterday, it got closed at resistance level, stayed there, did not drop back down. This morning, we opened a little bit lower and zoom, right through the resistance level. Now, it's not that it's too strong, too quick, too fast. It had a little bit of a rest there, but now for the first time for several days, or about a week and a half, we're overbought again. So a lot of people like momentum trading. Momentum trading says if something's very strong, what's in motion tends to stay in motion. I'm not just, that's true, but I don't like trading that way. My expertise is in picking market tops and bottoms as they happen, the day of, or at least not being too late on deciding it was an important turning point. So I think there's going to be a little bit more strength. It's going to get a little bit more overbought, maybe for a few days, and then turn back down. You'll see it here, or maybe a little lower, but after it goes up some more, and then it'll be toward the end of next week or the week after next week. Next is XHB. New high close. It looks like it's going to be coming along just fine. Got no problem with the way it's acting. Pushing through resistance levels, previous reversals, new highs for quite a long period of time, and very close to making a new high since what? March? Wow, March 28th. Very, very long time. Wow. I'm going to pause for just a second, please. So you see, this looks real good. It's pushing into new highs. Should stay strong. Spider is now 407.15, 16 new highs. Coming along fantastic, but not real fast. Again, we got an hour and a half to go. So I'm happy camper. That almost concludes our two more sector section. New highs, new high closes today since August on this index. I can't help myself. I'm obviously bullish. But again, we are getting close to overbought conditions, and I would expect a little bit more strength and then a correction back to where we are, or maybe a hair lower. This area is going to turn into, or has now turned into, a good support area, 67.36 on XRT. Last one, XME. New high closed yesterday, going sideways today. No damage done. I like the way it looks, looking for higher levels. What can I say? Just bullish. Last look at the spider before we close down for the week. We're at high and last on the S&P 500. We are coming very close to that 410.49 highest high since September. And there's only one little bit higher resistance level in that little zone, and that number would be 411.73. Above that, you basically don't have any higher highs until August 15th, August 16th resistance level, which is at 431, 432 almost. I love it. Thanks. Have a great weekend. Profitable trading to you. Stay in early. Bye-bye.